We still think there is room for a hike, and the reason for that is that the US economy and the global economy has gone through something of a soft patch, and it makes sense for the Fed to pause, to watch the data, to see how things evolve. But overall, we think that if the economy grows something north of 2% this year, which is what we expect, we should still continue to see jobs being created to the tune of about 130,000 per month, which is above the natural rate of jobs growth for the US economy. It means the unemployment rate will continue to edge lower, wage growth will continue to edge higher, and that's a scenario in which the Fed probably will hike maybe one more time this year, maybe early next year.
Right. A Fed on hold for 2019, say we take Jay Powell at his word, depending what happens to the global and the US economy later this year. But what does that mean for economies here in the Asia-Pacific region? We know that with the Fed on hold, we could see more flows into EM. What about some of the larger economies around the region?
It's good news, there's no doubt, because global trade growth is slowing. And that means Asia and some of our emerging markets here are going to have to rely more on domestic demand, and that means investment. Now, investment typically means a wider current account deficit for these countries, and investment is also sensitive to interest rates. On both counts, lower US rates really help these economies because it means they can run larger current account deficits, they can keep investment rates quite high, and maybe towards the tail end of this year, we may start to see rate cuts for some of our emerging markets. And that's going to be very helpful for these economies that will be suffering probably from slowing export growth as we go through this year.
Okay, Hadley's got a question.
And Shaun, it's Hadley out in Abu Dhabi. Talk me through what this all means with regards to the U.S.-China trade front, the trade wind or the headwinds that are coming off of those conversations. What's that going to do to growth in 2019, do you think?
Well, it looks like a substantial escalation in trade tension now is off the table. We are approaching what seems to be a short-term deal, which will probably freeze the relationship, at least for a while. But we think the long-term issues are far from being resolved. Some of the structural issues that the US wants to see resolved, we're going to have to see how that evolves over a sustained period of time. And one of the key offers that China made in the last month or so was the new foreign investment law. On paper, it looks great, but frankly, it's quite vaguely worded. And I think the US is going to want to see how China commits to its actions in practice rather than just simply on paper.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.